Hello. Great. Good afternoon, all. So great to be here and doing this session on the role of fintech in sustainable finance. And we've got an esteemed panel here. And thanks for really, coming here in time. Post-lunch session is difficult, so we'll try and make it, good in terms of giving you some numbers, anecdotes, examples which we have from our esteemed panelists as well, right? So just a quick intro, and of course I'll let them introduce themselves. We've got here Arvind from basically Sold Out NFTs, founder of Sold Out NFTs and Galaxy Trading Commodity Finance. So we'll talk about that. And we've got Faisal, who's the head of ESG and corporate strategy for Mashrek. And we've got Manal, who is the partner at GeniusX. Yep. So quick intros, one line. Then I'll go for mine.
Hi everyone, my name is Arvind, and like it was mentioned, I am a founder of Sold Out NFTs, so that's what we got popular for, so tokens and NFTs. And essentially, the community I have is a trading community where a lot of people get into crypto by just learning how to get signals and introduce them into the Web3 world and crypto, blockchain and everything.
Hi everyone, lovely being here at the World Financial Conference. My name is Mana Rifki. I'm a co-founder of Gloomy Ventures. It's a woman-led VC. We just got the IPA from Abu Dhabi Global Market to set up a VC fund here, as well as a partner at GeniusX. So GeniusX is a Web3 accelerator. We help projects to grow and develop and also help them fundraising. I'm a PhD researcher in digital assets, so you can tell that I'm all in blockchain. Happy to be here and happy to discuss sustainability. Thank you.
Great, thank you.
Faisal Shimri. I'm the head of ESG and corporate strategy at Mashrek, where the leadership of the bank are emphasizing and determined to integrate the ESG into the corporate DNA, spearheading the engagement in the region and internationally. Previously, I was the executive director of digital transformation and AI in the Ministry of Interior, spearheading the digital transformation journey for 33% of the government federal services in the UAE, federally and locally, where we are scoring the 6th on smart services and the 13th on digital maturity. I'm also a government excellence assessor and digital maturity lead assessor, assessing different government entity. Thank you.
Thank you. So just before we get into the details and really talk about sustainability, just setting context on fintechs more generally and what's happening, what's the environment like, right? So this was a challenging year across the board, right? Not just for fintechs, but otherwise as well. But fintechs funding particularly fell nearly 50% from last year, and it's been a trend going on. Funding winter is here to stay, some people are saying. God knows how will that pick up. But regionally as well, we've seen EMEA following the global footsteps. It's coming down a large extent in a similar kind of line. But closer home, UAE has maintained some bits there. There has been a drop, but yes, UAE has maintained a list wherein the funding overall has come for the first time in the top 10 countries where the funding is, happened, and 1.3 billion of funding for fintechs has happened here in the UAE. So really, why we are talking in this context is a little bit about, before we go into, details, we wanted to talk about really how does investing happen and what's really the mindset behind investing in fintechs and then, into ESG. So just around that, Manal, do you want to, probably throw it open and tee us off?
Yeah, sure. I mean, on a macro level, I guess the last 2 years has been very challenging for investment, either to fundraise or for investors themselves, since we got interest rates raising up. The Fed we're increasing interest rates. So this is on a macro level, which is, as you have mentioned, is a difficult year for everything. Now, coming back to the sustainable investment, we have seen a withdrawal of $10 billion of funds from sustainable funds in general across the board, which is not only linked to the macro level situation, but also a lot of sustainable projects, they were underperforming compared to other, if we speak about fintech or we speak about green tech, they were dramatically underperforming. And that's because we had like a good branding about the ESG and the mandate. However, this investment, they were not really rational. So as I have mentioned, as a fund, we have LPs, we do have investors, and we have to show numbers and performance to our investors. So for us as a fund, yes, we do have an internal ESG scoring, especially on the social level. We are a women-led VC. We try to fund as many women entrepreneurs out there. However, we can't really give a funding just because it's a social project or it's a climate tech project. We need to have a good underlying technology. We invest mainly in blockchain projects, AI according to the projects, but for us the underlying technology is very interesting. Then we have the social layer or the social impact, the environment layer as well. So I guess, you know, from CVCs, for example, and venture capitals, there is a different mandate because most of the corporations, they do have funds to help more ESG projects out there, and they don't really have a return on investment mandate. However, for a private sector, as a venture capitalist, we do have a mandate to give back to our investors the best outcome and the best result to our LPs in the end of the day.
Excellent.
If I may.
Yep.
Yeah, so also just to add to that, obviously just so blockchain of things, I suppose the bull run versus the bear market, that already introduces some challenges. And then as our panelist was mentioning, when a company, for example, like Starbucks did this, where they wanted to figure out everything for their sustainability from a bean all the way to a cup. And the challenges they will have is, okay, so which chain are they going to do this on? Because if they do it on a wrong chain, then that will supposedly will do even more damages to the environment. If they pick a chain, then what happens after 6 months on that chain? What if that chain stops marketing or something happens to that chain? Whatever in that environment around that chain happens, then what, right? Would they need to then spend even more money and then get more investors to spend more money, create more technologies on a specific chain that's not the one they started with? So that's one thing. Second thing is, what they're trying to also do inside the companies is just bring transparency. So how they use the blockchain to show how the data is stored, how the reporting is actually done, and all of these things, it's not something that they can just Google and figure it out. For that specific company, they need to figure out, okay, who's going to be responsible. If they do it correctly, they need to then actually test it out, and then they need to be able to report it on their consumers, investors, and also the senior managers. So there's a lot of things, as you can tell, that's involved. So that makes it the challenge as it is. But then obviously we're making progress, and that's important.
No, excellent, good points there. But coming to you, Faisal, where do you think that we could have, incentives, subsidies that can aid some of this investments and money coming into fintech and sustainability ultimately?
With the new corporate profit tax coming to execution, there are huge opportunity that could be allocated by, let's say, considering encouraging companies to invest or inject 1% of the corporate profit tax into the ecosystem of the venture capital. In cases of losses, you will be compensated from the corporate profit tax. In cases of a profit, your profit tax will increase.
Fair.
Plain and simple. In addition, it's an ecosystem, it's a circular economy. We need to look at whatever we invest is coming back. It's not going to waste. In addition, when we look at subsidies and incentives, we need to look at the bigger picture. Everyone talks about ESG, without looking at the Sustainable Development Goals. The integration between environmental, social, and governance comes line with the SDGs. The delay or the current targets of Sustainable Development Goals globally are not met. In fact, they are behind the plans by more than 50% averagely. In some countries, it's more. So when we talk about subsidies and incentives or even rewards, we need to redefine our priorities. For example, if we look at certain continents, Europe, ESG means Green's project. Green. Where is the social? Underprivileged family, people who with determination, people who are coming from correction facility to ensure that we are fighting crimes, etc. That's a big challenge that we need to address. In addition, when we talk about environment, it must be end-to-end sustainable. For example, electrical vehicle. Is lithium end-to-end green? No, it's not. Mining is a disaster. Recycling doesn't happen. So why it's green? After the energy crisis caused by Ukraine war, no need to go to politics, but let's focus on the subject. Nuclear became green. So tailoring the regulation on the preference of political, priorities doesn't make things sustainable. I'm not saying nuclear is not green. It is sustainable because with the growth of energy security challenges and the move from fossil fuels and charcoal, we need all methods of energy in place with the highest civilian golden standard of safety. And we need to put Fukushima disaster as the sum of all fears. Tsunami, earthquake, nuclear reactor, and Chernobyl. Those things definitely needs to be part of our risk register, part of our taxonomy, part of our fintech or emerging technologies that we need to address and prioritize when we talk about ESG.
I think, Faisal, this is really great in terms of the point around how we should make it safe. I think that is crucial. Don't shun anything which is currently, I would say, out there in terms of really expansive, but basically how do we make that very, very safe? So given that and what you mentioned sort of within ESG, focus for sort of, what should be the focus between these three? And, people do tend to focus on one thing, but where do you see the focus truly to be?
We talk about blue circular economy, green circular economy, full stop. The integration between E and S is mandatory. So when we talk about, let's say, energy transition, how many countries are enabling or prioritizing energy transition in food security? So biogas, for example, or agrivoltaic. How many institutions or government sector would finance a farmer to enable his energy transition, to reduce his emissions? For example, dairy products, cattle. They are one of the biggest producers of methane. We can accumulate the methane using the biodigester from the manure into producing low emission gas, which can be used for different purposes, and manure. We can enhance using agri-tech the productivity and reducing our emission, which is done in Netherlands. Those kinds of disruptive practices needs to be escalated and rolled out everywhere. In addition, when we prioritize, let's say, social financing, I cannot expect a country, an underdeveloped country, to address energy transition crisis while they have people dying from lack of medicine or lack of food. That doesn't work. You cannot generate emissions for 400 years since the third industrial revolution and fourth industrial revolution and then come lecture me about your emissions. My carbon footprint is barely 5-10 years. Yours is 400. So we need to be fair. Climate justice is justice and fairness. We need to collect accumulatively the emissions overall. And that cannot happen without a strong technology evolution that will address those kinds of things. We have a UN initiative called Open Data Initiative, and everyone is participating in it. Where is the climate data? Where is the accumulative generated emissions from all the countries? If we look at the loss and damage fund that was created in Scotland a few years ago in COP, and in the UAE it had a huge leap towards the future, materializing with hundreds of millions, 100 million from UAE and Germany. One of the biggest emitters who talk about, or the country talks about emissions, donated 17 million. No comment.
Interesting facts and figures there. So, so this is some great kind of stuff we've heard on investing, value, what sort of incentives do we give, how do we get all of this together. Just moving on, Manal, probably some thoughts around themes where coming into fintechs, right? Where are they doing a lot with sustainable finance? What are the kind of, and sustainable finance is all, right? ESG, so you're looking at environmental things and of course, social angle, and the governance, right? So where do you feel fintechs are playing more, in which theme to promote ESG?
I do think financial inclusion is one of the biggest themes. It's not a new one, but it's one of the main one. And as long as we do have people who don't have access to a proper banking or proper funds across, the globe, we are thinking about Southeast Asia, Africa, and Latin America. I guess as long as we do have these underserved populations, we can't speak enough about financial inclusion. And I guess blockchain, coming deeply from the blockchain perspective, decentralization word is such a great technology that's going to help a lot of people who don't have a social scoring credit and having access to funds. I do believe not only, good technology as DeFi, decentralized finance, blockchain, they're not enough if we don't have multiple parties. I'm thinking about banks, I'm thinking about funds, governments, and multiple institutions. It's not like a one-man show. We need a lot of parties who can join hands on hand to tackle this problem. Lately, one of our portfolio companies, they are doing some great job in Africa in partnership with the SC Ventures, Standard Chartered Venture. They have been very active in the funding space, especially in fintech. And by the way, they just opened yesterday a new SC Ventures in Abu Dhabi. So the project is about funding a scholarship for students. And the social aspect is the risk for any bank who gonna fund these students is worst case scenario. You are funding students who gonna be active in the real world and gonna help their families to be a better person in society. So it's not really diminishing risk from a finance perspective, but from a social perspective, it's a huge impact on the society. So this project started in Gambia with and also the new thing is the loan is not given to the person, it's given directly to the universities or the school. So that's also a great, collaboration between banks, between the funds, and also the educational institutions. So I guess this kind of projects, that's what gonna drive the fintech ESG perspective. And of course, financial inclusion, we have a great example from Kenya. It's such a developed country in Africa where you do have fintech mobile. We can just send, funds within a minute. They don't have blockchain or whatever, but they do have the infrastructure and also the financial literacy, because in the end of the day, it's not about using the latest technologies out there, it's making it accessible and having this great adoption. So integrating this kind of technology within underserved countries, that's what's going to drive the real financial inclusion, not only in numbers for the funds, but also on the social impact of it. So this is where we have the intersection between the social outcome and the environment outcome at the same time. Yeah.
And great points. Yes.
If I may, so also it's you gotta note how there's a conflict between, in most countries, there's a conflict between the social side of things and then the regulation. So if just let's bring it to real life. So you want to get a personal loan, you want to get a business loan, there's going to be a scoring system in most countries that I know of. And then the moment you actually decentralize that, then that changes that structure for the completely like inside the banking and all the centralized financing that's out there. And then, so now it's a new thing, right? So we do actually have those things where you can actually have a digital asset, something on the blockchain, and actually get a loan against that digital asset that's available to everyday humans. No social credit score or anything needed. You could be from any race, any gender, anything. And so there is that, but then that also introduces, but let's say government, or let's say the centralized finance then will have to adjust to be able to either integrate or have their own, let's say, system, have more benefits, or be able to actually interact with that in a way that people are still able to, I suppose, navigate between the two, between the centralized and decentralized.
Oh, great points. Anything to add, Faisal, on this?
The challenge around E&S is evolving. And of course, when it comes to technology, we need to utilize the technology in a way that was not used earlier. But the digital divide is coexisting. The digital divide before was something we measure for countries or between generations. Now when we talk about corporate and even individual, when we talk about ESG rating, some people don't know what's ESG rating. So for example, in our bank, when our leadership envisioned that we need to commit to ESG, we start engaging with the ESG ratings and ESG analytics, and we start publishing and sharing the data we have. In 1 year, we had a leap from severe risk, not to high risk, no, we went directly to medium risk. And the leap of 300 positions internationally in 1 year, in-house, we didn't hire a consultant. So such leap reflect that when there is a will, there is a way. When you are committed, you can deliver. And ESG rating is not rocket science. It's a very simple, straightforward ask, but you need to have the know-how or the commitment to learn the know-how. This is one. Two, when we talk about data and we talk about blockchain, etc., and the digital divide, when we talk about scope 1, scope 2, they are straightforward. Without data and without technology, emerging technologies to address that gap, it will be almost impossible to address scope 3. The challenge around scope 3 requires a complex supply chain kind of data. We need to embed open data initiative, we need to embed incentives from the government, we need to embed guideline and capacity building public, and exactly like when the government start teaching people how to use Office and Word and other computer skills to enable the move to electronic government and then mobile government and now digital government. We are in the era of AI. We need to consider ESG as part of the learning journey. And the capacity building is not something we do on seasonal basis. No, it should be part of our ongoing commitment. CSR now is embedded within the social pillar in ESG. In fact, Dubai Chamber is soon they will announce it. The CSR is now ESG brand. They are not talking about E, they are not talking about S, it's ESG. And this is a way forward to give you a signal that this is our path to the future. In addition, when we talk about inclusion, we have 205 nationalities in the UAE. For God's sake, the UN has 190. We are more than the UN. Not lots of people understand this. That this is automatically will give us a higher social score for any company. When the Ministry of Human Resources talk about cultural diversity, they are enforcing cultural diversity as a KPI. Women, people of determination, etc., etc. These are key enablers that already inject into our ecosystem and social taxonomy from a government side. From the private side, we need to take it forward, and we need to talk more about certain priorities that we need to reflect. So, in our supply chain, how many of us consider underprivileged families to be part of the suppliers he coordinates with? How many of us talk about engaging with underprivileged families or NGOs to be part of our ecosystem. These are things for us to consider.
All practical things which mostly are said, not done, right? So great to hear these points. And I think just recapping some of the points which you had talked about earlier as well around the unbanked population and how fintechs are playing a part there. I think within that a big element is also how, of course, women are being brought into the financial kind of scope, because mostly it's been, mainly on the other side, right? But now women are coming, and that's being enabled by a lot of, probably things that you're funding, that you're seeing on the side on fintechs, right? Similarly, I think which Faisal, you were mentioning around reg and compliance, right? So really, is there stuff which they can do on fintech side again to really help on the scope 3 implementation, right? We've talked about scope 1, scope 2 for enough and long. Now it's really, the next transcending. And the whole game being data led. I think that's really key, which you had mentioned as well, because...
If I may elaborate,
Yep.
everyone talks about fintech, everyone talks about, emerging technology, AI, etc. But when we talk about scope 3, how many corporates did work on this? Yani I can presume those companies who are listed on Gartner Magic when it comes to GRC will definitely either acquire or buy a share in any fintech that will address scope 3 because of the complexity.
Exactly.
When you simplify it, you need someone to come outside the box to have a new perspective and a new perception to resolve a problem that exists. Otherwise, if you come from within the same box, you will never resolve it.
No. But great. Thanks. I think this is really good in terms of this sets up nicely into the next, kind of theme. So we're seeing and discussing a lot on this. You had mentioned around social as well. So what do you see in terms of, other examples from across the globe which you wanted to bring to force, which the region could also think about and all of that?
I was talking in COP and with the UN event, and I highlighted a few things. When I said we cannot take regulations and standards from another country or another continent because it doesn't fit us. So, for example, when we talk and highlight the social pillar, there is two examples in front of us, one recent and one historic. The recent one is in 2010, Bank of England with Ministry of Justice identified the huge gap in supporting and including the people who left correction facilities, inmates. They take the programs, they take the training, they leave the jail, and then they cannot open a bank account, they don't have a job, and then they commit a crime and they go back. The jail retention ratio is more than 60% in some countries, which reflect a failure in the system and the failure to include those. Some of the criminals who went back to jail for serious crimes were in jail for simple crimes. Some of them maybe didn't pay the rent, didn't pay the electricity, had some fines, had a car accident and he was supposed to compensate and he didn't have insurance. Those non-serious crimes caused them to commit serious crimes after, when they were jobless or starving. I'm not justifying the crimes, but again, if we don't enable those segments in the society, what's the result? An increase in crime, poverty. Lots of SDGs will not be met ever. So they created something called social impact bond. One, they proven to be profitable because of the guarantees coming from the government using lottery money. I'm not talking let's create a lottery system and let's use it for a good cause. No, but they used money regardless of the source to support and fund an ecosystem around social impact bond, and it is profitable. In Islamic civilization, we had something called waqf and takaful. Waqf is like the same concept of most NGOs now in Europe and America, where you will allocate certain assets that generate revenue and you use it for certain charity purposes. And takaful is like a guarantee. You use the income or the profit to create the guarantee needed to give the assurance for the financial institution to create the ecosystem to fund. Then you will fight poverty, you will reduce crimes, and you will address ESG. Let's put it in perspective. If you go to an African country or Asian country with an underprivileged farmer who's struggling to produce any crop, and you ask him, like what some first world countries now are asking, you have to stop using diesel or whatever, and you need to use sustainable energy. From where he will finance it? He barely produce crop to eat. So when we talk about energy transition, again, with underprivileged family, it will trigger the two pillars, E and S. So we need to be pragmatic and we need to be lean and agile to enable this transition. It's a journey.
Great. Any other points you to add? Manan or Arvind?
I mean, I would say to add to that also, maybe not as specifically the farmer example, but just the consumer or just the individuals, let's say. So for them to be able to trust that what goes on to the ESG and what goes on to the actual, let's say, financial inclusion and everything around it, it's just the education. And then education around, maybe not necessarily just the technology, how it works, but just at least just a simple understanding of things, like as just like simple how people know what internet is, right? So just understanding just bare minimum of what, how they can access the data of, let's say, the ESG of a specific company that, or let's say specific corporation, specific government that's telling them, hey, this is what you need to do. Then, and as if it is open source or not, then that would also incentivize that person to be like, okay, well, cool, now I understand it, now I can actually do this, and also I can trust it.
I would add one point. It's not only agriculture, homeless people. There are millions in some countries. Education is one of the charities accredited in Quran and the Islamic history and the civilization. Education, al-gharimin, those who have loans, lots of people go to jail because of loans. In addition, homeless, people who seek medicine. We saw in movies and in reality, some incidents are worse than fiction. People need medical services. It's a basic human right. In some countries, if you don't have the money, you cannot get it. Regardless of the category of the country or the civilization, I see it as a human right. So if we look at it from ESG and SDG perspective, it's a right that needs to be affordable and available. So these are things that we could consider.
Absolutely.
And to conclude, I guess, every region around the world has its own specific needs. And for example, which is the point of my dear panelist, for example, someone in Africa doesn't really need to worry about the climate change and, how, we can have, green tech or carbon emission. I guess, in Africa or other continents, the need is more on the social impact. That's like, they can't really think beyond that. So I guess, we need a specialized regulation, specialized funds for each region, because each region has specific needs, and only someone from that continent or someone who really knows the struggles of a certain population can understand how to serve them. So because we got a lot of, again, from the fund perspective, a lot of technologies coming from Europe about climate tech and everything. But again, that's not gonna work really, for example, for our fund in Africa or in Southeast Asia. So I guess, specialization is something that we have to care about in terms of regulation, but also in terms of data. Going to the data, I guess we have a lot of wrong data going around, which can make the decision of certain investors, or certain decisions can be taken in a wrong way, just because those data, they are not really speaking about the whole population, but they are speaking about, certain population or an echantillon of a certain population that is not really saying a lot about what's really going on, for example, in Africa or in Southeast Asia. So I guess we really need to specialize funds for each region, and also regulation for each region, because the ESG mandate can be changed from a region to another.
I would flag a few points from an open data perspective and transparency. Jesus said, those who had not committed a sin, throw her with a stone. The president of Brazil highlighted in COP28 that the spending in military activities in 2023 alone exceeded 2.3 trillion, which is more than what the world need for energy transition in 1 year. Plus, we don't calculate the emissions generated by non-civilian activities. No one talks about it. So I go to Emirates or Etihad and I tell them, guys, you are polluting Earth. But I don't talk about non-civilian flights, which is flying all over the place. Two, we don't highlight how much emissions generated from millions of Celsius degrees generated when we have a nuclear experiment, or how much particles of a nuclear are emitted into the air. For example, I'm not going to mention the country, but in Algerian Sahara, 43 civilians were killed in nuclear experiments a few decades ago. People are struggling with cancer and radioactive poisoning until today. No apologies, no compensation, no medical services. And even the map of the experiments were not disclosed. So these are, yes, it could be considered political, but it's also affecting our sustainability approach. We need to flag non-civilian activities and we need to allocate our priorities. You come to me and you tell me, focus on sustainability, and you yourself are one of the biggest emitters in the world. This is hypocrisy. So we need open data to disclose.
Yeah. No, and fair points. And we've mentioned a lot of, we've shifted obviously a little bit of track. We've gone into a lot of challenges which got mentioned here. So I'm not going to cover that topic as well. But clearly you can see certain challenges needs to be addressed, need of the hour right now to look at ESG really taking off and fintechs playing a very key role in that, right? So I think we'll close off with one probably line each from you on the way forward and what you see, just a line. And it'll be nice to close. Probably one, I'll start from you.
Yeah, sure. I mean, I guess interoperability between different, for example, for the data, it's very essential. We need more transparency within the ESG landscape because that's what gives us a good understanding about what's really going on. So as a believer in the Web3 technology, I do believe that blockchain is the way forward. It's not the only solution, as I have mentioned, but I guess it's really a great technology, especially combined by AI tools. I think we do have great opportunities, and the challenges of today are the opportunities to be solved tomorrow. As I have mentioned, the social aspect is the primary one because that's the base of every society. But again, we are in an environment where we have to care about the future generation. So we do have the tools today, AI, blockchain, but in the end of the day, we do need to have hand-in-hand collaboration between funds, between banks, between regulations in order to have a true impact.
Okay, so I add into just the collaboration side of things. Obviously, there is the government side of things, there's the corporate side of things, and then there's the individual side of things. So no matter how much on the government and corporations, there's let's say a initiative for some specific ESG score to be done, unless people themselves are understanding of, okay, so you're talking about the open source data, transparency on the blockchain, and if they don't know what blockchain is or ESGs are, then those individuals will never even get to even the understanding of, okay, how is ESGs going to benefit them? And them meaning, let's say that person is an employee of a company, that person is let's say C-level of a company, how it's going to impact the higher up or lower, and then the company as a whole, or let's say the company itself, like the corporations, and then corporations on how they're going to impact other corporations, and then let's say how the government is going to impact the corporations, and so on and so forth. So so the point is, individual side of things as well, there needs to be education, there needs to be integration into the, I suppose, blockchain of things, to be able to even tell them, hey, if you want the data to be noted, reported, and be transparent on the blockchain, you got to understand, first of all, what that is, and then also how you can actually use it, just have even minimal understanding of things, and then from the higher up, they can actually introduce it to the individuals, and the individuals actually use it. So.
Being a member in the executive committee in the bank is enabling me not only to highlight certain priorities to my agenda as ESG and corporate strategy, but also enable open dialogue with my distinguished colleagues and spearheading the challenges around ESG. Our group CEO highlighted the necessity of transforming business from normal banking practices to a new innovative era. So we have an emission calculator for our retail banking clients. We engaged on biodiversity activities with NGOs in UAE and soon in other countries. Not only this, but our commitment to sustainable finance in the UAE and in other international branches, partnering with 4 other national Emirati banks, committing to invest 1 trillion dirham by 2030. 1 trillion, 1,000 billion, to enable the transition and the journey. So we talk the talk and we walk the walk. In addition, it's not the only activity we are engaging in. We are spearheading an initiative that we produced. It was my idea and the leadership of the bank supported, and now we are engaging with several government entities. The stakeholders are different, but we need them on one round table. We need the regulator, we need the government, semi-government, private sector, and even NGOs on one table to expedite the journey, to enable SDGs integration within ESG ecosystem, creating a taxonomy of E and S. So we came up with an initiative, we called it UAE ESG and Sustainable Finance Ecosystem Accelerator, to enable expediting the journey towards mature, sustainable future. Thank you.
Excellent and great points. Thanks, panelists, for a wonderful kind of insight. I think we can open the floor for any questions that are there in the last 5 minutes. I think I don't know, Achal, how much time we have.
We still have a time.
We have some time? Okay, great. So questions.
Good afternoon, colleagues. First and foremost, I'd like to thank the World Finance Council for putting up such an important event. The world is facing so many challenges, and we're living in desperate times which call for desperate measures to be taken in order to address those challenges. My question to the panel is, if you had the power to bring up, as a panel, if you had the power to implement transformational changes, what are the 3 key steps you take to do so?
Good one. And who wants to go? Who has the power?
Well, can you clarify, like, you mean in what context?
Well, this discussion, I've noticed, has mostly centered on ESG.
Right.
In those 3 spheres, there are different challenges.
Yeah.
For example, when you talk about governance, and governance usually hinges on things like regulation. What steps would you take to ensure that you find a balance in implementing appropriate regulations? I hope you're getting what I'm trying to say. So let's, for environmental purposes.
In any project, you need people, process, and technology, PPT, to achieve a successful journey in evolution. But without finance, it will remain a dream. So if you want to buy a car and you don't have money, either you steal it or you pray to God you win the lottery, because no one will lend you the money. So finance is a key foundation or a pillar or a cornerstone in enabling any transformational project. When we talk about energy transition, without enough funding, that will never happen. Without people being enabled and educated, they cannot commit. Yani if you come to someone who barely read and you talk about the impact of climate change on his crop or chicken or cattle, and you talk about the necessity of installing a wind turbine or a solar panel. It's gibberish to him. It doesn't make sense. So you need to enable people. You need to change the process. So for me as a bank, to give money and lending with a high risk that the obligor doesn't have enough guarantees or assurance, or there is a high risk that he might lose his crop or source of income. As a bank, I cannot give him money with a high risk. So I need the process to change, whether from the central bank or the regulator, or by bringing someone to give me enough guarantees and assurance that the risk is shared, to enable me to decide that I need to give him money. Plus, there are certain regulations around financing fintech or venture capital with a high risk, or SMEs. When you go to a high risk market with someone coming as an SME, you will find it very difficult to open even a bank account. Nevertheless, asking for finance or funding, because the risk is exponential. How many unicorns we will have in the SME ecosystem? 1 in a million. Lots of them, probability-wise, are going to close. That's a fact. It's a sad fact, but it is a fact. So to disrupt the probability and to reduce the risk, we need the process and changes in regulation and incentives, rewards, name it whatever you want, by enabling us as financial. At the end, we are not charity. We are employees investing on behalf of the owners or the stakeholders, transparently. If we lose, we close or we get fired, plain and simple. So if we want to create a sustainable ecosystem with everyone winning, we need the regulator to understand our risk, reduce our risk appetite, and encouraging us to invest more by, let's say, putting rewards, incentives, or tax rebate. So in case of losses in certain high-rated E or S, including SMEs and venture capital, etc., we can deduct our losses in installments from our corporate profit tax. That's a sustainable approach, but it needs maturity and understanding that we need this to happen to flourish the ecosystem of SME and innovation. At the end, if we look at Google, Microsoft, Apple, any of those mega companies, they started in a garage. They had a very humble beginnings. And the next unicorns are going to start in a very humble grounds. For us, in Mashraq, for example, we created a digital platform. We call it New Banking. It's dedicated for SMEs. And we are one of the shortest period consuming banks to open a bank account and provide certain basic services, banking services to SMEs. Is that enough? No. We have a higher ambition. We want more, and we want to engage more. But without the taxonomy and the ecosystem evolving with us, we cannot deliver alone. At the end, it's an ecosystem. Technology, we have fintech, we have agri-tech, we have tech in everything. But TRL, technology readiness level, is not assessed transparently. Sometimes there is a bias assessment. Yani for example, you hear, oh, electrical cars are great. You find 100 people immediately go and buy a car. And then they get shocked. In summer, if they open AC, the 4 hours driving become 2.5. TRL is a very serious measure that we need to take very seriously. Safety, etc. So it's an ecosystem of PPT plus finance to enable the evolution.
I hope that was some bits to think about on your question. Any others?
Thank you.
Yes, Tom, please.
Yeah, it's working. So I'd like to raise a question based on what has been discussed at the beginning of the panel related to blockchain and something that has been discussed at the end, the interoperability.
Yeah.
So joining dots between blockchain and interoperability.
Yeah.
I mean, I remember that blockchain is not a new concept. The first time I heard the concept of the blockchain, I think I was 2 years old. I was coming from someone that was my maternal grandfather, wine producer, was talking about blockchain at the time. So trust me, long time ago. And so I think that interoperability data, and you guys, I really love what you said today, is based on one key that is interoperability. I think that you mentioned and in your speech. So when we talk about interoperability, we know that wherever we talk about blockchain, interoperability must be there. Otherwise, we don't understand data. It's difficult to aggregate data. And in financial services as well, I think that we will discuss in the next panel as well. So what do you think is missing here? I mean, just a short answer, so I don't need, what is missing here? And in the way we apply the blockchain today, could be an environment, can be in the technical, the way we manage data, to make the data, in the end, becoming a better experience for the user, final user. Thank you.
Do you want to take that one? Yeah.
Yeah, so thank you for your question. I guess what is missing is, first of all, in the blockchain itself, how many layer ones and how many layer twos we have, how many tools do we have just either like, within the blockchain space. Every day, like beside Ethereum, we have so many layers that's, in every cycle we have, Solana, before we have Stellar, before we have EOS, for the old people in the crypto space. So within the blockchain technology itself, we don't have an interoperability, within the technology. Now moving, to the real world, what is really missing is standardization, first of all, of what's the best technology out there. Do we want to use Ethereum? Do we want to use, an Oracle? Or do we want to use just DLT? There is a lot of problems, for example, for government, they don't really want to use blockchain as it is, the advantages that blockchain has for many governments is not really an advantage. They don't want to have data going on there, and they can't, have any way of erasing them moving forward. I'm speaking, for example, it's a bit far subject, but CBDC, for example, they don't want to use blockchain for it. They want to use distributed ledger as a technology, right? So we do have a problem within the blockchain technology itself. I guess now moving forward to our subject and your question, we have now a new trend, which is real-world asset tokenization, which is bringing all the assets that we know, either from the sustainable point of view or not. We do have now finally a connection between a blockchain, which is such an obsolete technology, and the real world assets. What is missing there is oracles, that they are decentralized and also standardized within the regulation. I'm thinking about, for example, Chainlink is one of the best, companies out there. At Recorda, they are doing a great job of connecting the blockchain as abstract technology to the real world that we know. Yes, blockchain technology is such an old technology if we think about the cryptography. However, blockchain or Bitcoin started just 10 years ago, so we are still at the beginning of the technology. However, the adoption that we are seeing within the different financial institutions or big corporation, I'm sure, in the next 2-3 years, we're gonna have big Oracle companies and data aggregators that they're gonna have blockchain elements as well as a real world asset tokenization element at the same time.
Yeah, so just to add to that, so the conversation about the layer one. So there's a conversation about decentralization, and the only decentralized one being fully decentralized one being Bitcoin, and then the rest of them not being decentralized, and then somehow finding themselves on some server somewhere. Is still so that's on its own is a challenge. So there's even for the technical side of things, even the blockchain itself is not really providing the solutions that's like let's say absolute. So there's that. And then the other side of it is that, okay, so let's say you have these solutions from the blockchain to provide the data, provide the transparency, and so on and so forth. Then the question becomes, it's like, okay, which brand, which company wants to go first and try it out and put their reputation in danger? And then while knowing every day if you're watching news or online on Twitter, for example, all these big chains that, let's say not even top 100, let's say even top 10 chains that we talk about, they're one after another, they're being sued by SEC in the US, right? So for one thing or another. So then would they want to be involved? Like let's say a big corporation, would they want to be involved going on a chain that is on the, it's a headline of the news? Maybe not, right? So it's their reputation from the internally, that company, that corporation they need to think about. So that's also, it's very intertwined is the point. But obviously there's a solution, right? Companies are started, and it's just, that's what makes it slow, is just the government. There are like separate entities that not necessarily care about, the progression of crypto or progression of blockchain. They just care about their own tasks that they're paid to do. So,
when we talk about ESG risk classes, subclasses mainly, we talk about climate risk, we talk about greenwashing, and we talk about double counting. Blockchain is a key enabler to prevent double counting, specifically when we talk about carbon credit. In some continents, double counting, specifically when it comes to carbon credit, is a common fraud practice. The prices of the carbon credit are very low, that you cannot understand how come they can finance the carbon credit, or can it be sustainable? $10, $1, $3, $10 for a carbon credit in certain continent, it doesn't make sense. It raises the flag of fraud, double counting, etc. When we use blockchain is one of the methods to prevent this, specifically when it comes to carbon exchange. But we need to go back to basics. It's exactly like the hype of AI. 50, 60 years ago, AI was introduced, but we were not ready for it. Sci-fi wise, in the movies, yes, we were ready. Terminator, etc. But realistically, the storage capacity was not existing. Data was not there. Processing power was not there. Algorithms and data scientists was not there. The evolution and digital maturity enabled exploiting AI beyond expectation. Now the leap in technology is exceeding our best case utilization. The only worries we need to highlight is the ethics and controls around it. When we talk about blockchain mainly, I would flag digital maturity, enterprise architecture. So we need to talk about data architecture specifically, data maturity and digital maturity. And we need to flag that data ownership won't be a concern anymore. And it will be a key preventive measure for double counting and fraud, aka greenwashing. Thank you.
Great. Yeah. Good points. Great. Any last one? Do we have time for more questions?
If we have question, then we can close the session.
No. Thank you so much for being an engaging audience and hearing us on the valuable points on ESG. And thank you, panelists, for really putting in your thoughts on this very, very pertinent topic. Yep. Thank you.
Thank you, everyone. Now I request our moderator to honor our panelists for this session. Thank you so much, everyone, and the panelists. Now let's move to the session 6, and we explore about how fintech and banks are connected to ecosystem. Our moderator is Mithun and Sachdev, Strategy and Innovation Accenture from UAE. Panelists are Henin Sabe, Director and Fintech Strategic Partnership Mastercard from Dubai. Domenico Scafidi, Independent Consultant, Global Patents Innovation Practice, Bank of England, Standard Advisory Panel Member, United Kingdom. Karan Taluja, Portfolio Leader, Business Insight, Ernst & Young, India. I welcome you all on the stage. Now it's over to our moderator.